Hello, welcome to Invest Man. Today's topic is Bitcoin slump. In May 2022, due to the impact of the US interest rate hike, Bitcoin fell all the way down from $40,000 for 5 days in a row, and has come to near the previous low of $33,300. A drop below the previous lowest is imminent. In the last 6 months, the Bitcoin price has fallen 51%. Before we get into the reasons for Bitcoin's slump, let's understand what Bitcoin is and its uses. Cryptocurrency, also translated as cryptographic currency, is a medium of exchange that uses cryptographic principles to secure transactions and control the creation of units of exchange. Bitcoin, one type of cryptocurrency, became the first decentralized cryptocurrency in 2009, with blockchain technology, which uses a decentralized ledger. As of February 2022, there are over 10,000 cryptocurrencies in circulation in the market. Representative ones are Bitcoin, Ether, Coin, Ripple, and Dogecoin. Bitcoin was created by Satoshi Nakamoto, screen name, published on October 31, 2008, and the Genesis block was born on January 3, 2009. The true identity of Satoshi Nakamoto is unknown. Some claim that Satoshi Nakamoto is an anarchist, or possibly a group specializing in hacking existing physical financial system. Features of cryptocurrencies, which are also disadvantages, are: 1. The system does not require a central institution, and it is maintained through a distributed consensus mechanism that does not have to rely on the government to control fluctuations. The prices can get out of control and bring about a meltdown. 2. The ownership of cryptocurrencies can only be proven through cryptography. But there are still many fraudulent hacking vulnerabilities in the market, indicating that its technology is not yet mature. 3. The number of Bitcoin protocols is capped at 21 million to avoid inflationary problems. But there are other cryptocurrencies in circulation, so we are not able to ensure its value preservation function. 4. Bitcoin has its legal or legitimate uses. There are multiple ways to use Bitcoin, through channels such as electronic currency exchanges, Bitcoin ATMs, service providers, and individuals. But its volatility is too high, posing a risk of devaluation to holders. 5. Due to its lack of government control, relative anonymity, and difficulty in tracking, Bitcoin, like other currencies, has been used for illegal transactions, as a tool for crime, or to hide the proceeds of crime. Bitcoin has been accused of being a Ponzi scheme, in which people who buy Bitcoin need to find someone else willing to buy it in order to get their money back. With all of these characteristics, it is certain that Bitcoin is a speculative instrument. Because there is no economic entity to support its operation, holders can only expect the next taker to pay a higher price for the Bitcoins they have. If you look at the current trend, 2 years ago quantitative easing led to an explosion of cash on hand and it flew into investment assets and cryptocurrencies market, thus pushed up the prices. This year, when the Federal Reserve has raised interest rates and shrunk the cash flow in order to control the inflation, investors will have abandoned overseas investments and cryptocurrencies and invest back into the US dollar, realizing the purpose of the US to slow down the market. Coupled with the control of China's construction industry, many investors who are trapped will have to shed their cryptocurrencies to cash out to tide them over the bear market. Many people think that Fed had made the wrong decision, but it is quite the opposite. Just as the world is getting bogged down by the Russia war and inflation, US asset owners will have their vaults stacked up waiting to buy the properties in recession-stricken countries. Smart investors should stay away from cryptocurrencies as soon as possible and wait for the Fed to finish announcing rate hikes in June and July before investing in markets. If you like my analysis, please subscribe to my channel by pressing like and let me continue to keep you informed about money management strategies.